My name's Colin Godfrey. I'm fund manager to Tritax Big Box REIT. Thanks very much for joining us today. Thanks also to Numis for hosting this interesting conference by webinar. And also to Kevin for a fascinating opening to the webinar. Much of the themes that Kevin raised are also echoed in our own presentation, so apologies for any repetition. We've been asked to make a brief presentation today on the big box sector of the logistics market in the UK. And this should take around 20 minutes, following which we'll take questions. I'm joined by James Dunlop, who's head of our investment side for Big Box. James will open by looking at the effect of COVID-19 on our market. He'll touch on rent collection and sectors affected by the pandemic. James will then cover some fundamental drivers to our markets and its potential for growth. And then I will look at the supply and demand characteristics before we close with a brief outlook. James, over to you.
Thank you, Colin. Good morning, everybody. What I think is in no doubt is that the UK's logistics sector is underpinning how the UK economy continues to function through this crisis. But there are plates of change spinning within the sector itself. We have learned that there is a clear demarcation between those sectors and operators currently benefiting from the effects of COVID and those that are suffering. COVID has accelerated the business plans of the winners and has accelerated the demises of the losers, particularly those retailers with a heavy bias to physical retail and with legacy formats. The winning sectors we all know about, but just to reiterate, are pure online, food and groceries, homewares and DIY, and the third-party logistics companies currently bolstering the capacity of these former three sectors and other online selling platforms. It is interesting to note on this slide to see some of the recent comments in the press. This is Money's view, is that most people will maintain their new shopping habits post-lockdown. Why wouldn't they? It's more convenient, it's probably cheaper, and behaviour scientists suggest that it takes around 21 days to establish a habit, and we've been in lockdown for 35 days. B&Q reported a 125% increase in online sales, with an incredible 300,000 people an hour waiting online to get into their website. Ocado, as Kevin mentioned, reported 10 times more demand for their services before the outbreak began, and it had to close its order book at that level. If they'd had more capacity, they would have secured even more new customers. But only a fully automated robotic model can cope with a 10-fold surge in demand. This could not have been achieved without their state-of-the-art big box we funded in Erith in 2015. A similar story, an extraordinary one, with Amazon's grocery orders increasing 50-fold since the lockdowns began. Another theme in our market emerging is the rise of new partnerships. These were probably already in the offing, but the crisis has accelerated them. Morrison's, Co-op and M&S have teamed up with Deliveroo to deliver food to your door. Amazon, Royal Mail are helping the government distribute virus tests and protective clothing. The list goes on. And it's the online machine driving all of these changes across our sector. This crisis has accelerated the adoption online. The millennials were already on board, but even those who were resisting it pre-crisis are jumping on board now. For example, my 80-year-old father sent me an Easter egg bought online. I have no idea how he managed it, but he did. And then yesterday he followed up by sending me a book, a game changer for that generation. The next page, this slide shows the breakdown by sector of the contribution to the portfolio income of Big Box. By handpicking each asset, we've curated a well-diversified portfolio dominated by the key sectors that are winning: online, food, homewares and DIY, but also electricals and the third-party logistics, which are proving so resilient to our income and to our sector at large. The logistics sector performed well in terms of its rent collection. If you look on the right-hand side of this page, receipts for Q2 when compared to other sectors, retail booking just over an average of 50%, industrial and residential in the mid-70s, offices at 80%, and Big Box 90% will be in by the end of May. But we suspect the next quarter will be the tougher one for all of us, particularly for those portfolios with income secured from SMEs, operational occupancy related businesses, the restaurant trade, travel or hospitality industries. The Big Box sector will not be immune, but with some of the strongest balance sheets in the UK economy paying our rents, we hope to repeat the resilience of Q2, but we will see how that pans out. The next page, this one shows the statistics from the ONS comparing UK online sales and penetration rates for March 2019 and March 2020. But it's important to note, but we must remember, we were only really in lockdown for 7 days of March. so the stats only really capture about 25% of the picture of that full month. But as you can see from these bar charts, the stats start to document the enormous leap in growth. All food up 21%, non-food up 18%, like-for-like sales growth for homewares and DIY up 55%. The UK will probably have the whitest windowsills and wonkiest garden fences in Europe post-crisis. We cannot wait to see the April numbers when they're released, because there'll be more trajectory of an upwards curve. My next page, page 6, everyone's aware, of course we are, of the strong online growth over the last decade, rising to 19% of total sales in 2019. The key question, which we're all trying to wrestle with, is where can it rise to and at what rate? The graph to the left depicts pre-COVID. A number of forecasters were suggesting it could hit or exceed 50% by 2020. The blue line adopts a more conservative scenario of growth to 30%, which feeds a requirement of an additional 65 million square feet of logistics space. But if online sales represent half of all retail sales, the higher purple line, then that total rises to 155 million of additional space. On the right, the graph is our views. We've seen, post-COVID, we've seen a dramatic acceleration of the pace of online growth. The previous slide that showed in the first 7 days of the lockdown at the end of March, 19% grew alone in 7 days to 22.3. So what could it be now after nearly a full month of lockdown? 25%, 30%? Kevin mentioned 40%, excluding the grocery sector. It could be more. The key is we all know it's significantly higher. And it is our view that when we ease out of COVID, there'll be a more permanent migration from bricks and mortar retail to online. Many retailers will have lost their customers unless they can recapture them online. And to do that, they will need more big box logistics space and last mile space. By June or September, i.e. in 3 to 6 months, we will probably have turbocharged growth levels, which would have taken pre-COVID 5 years or more to achieve, and would have done it in 3 to 6 months. If we stabilise post-COVID at, say, a conservative 30% of total retail sales being done online, our already undersupplied occupational market will be demanding an additional 65 million square feet of logistics space by the end of this year. Positive. I will now hand you over to Colin.